the market has closed on its high and almost exactly at its high. So if you go back here and you look, let's just we'll count the bars. And this is an exercise that's made really easy by this particular software package. Whoops. So we have 19 total bars here. Okay. So of these 19 weeks, let's go ahead and count how many bars closed at or near the high. We've got 1. There's 2. And I'll give that one 3. I mean, seriously, look at this. You have 3 weeks out of 19 which closed at the high. So you have 16 which are off the high, 3 which are on or near the high. Okay, so obviously we have a bit of a change in momentum. Now let's take a look at what happened when the market started getting up into this area especially. Let's take a look at the weekly. You can see here the market closed way off of the high. You can see here it was pretty close, but this one was I guess it's marginal. It was above the midpoint. Remember, I've talked about that in the past. But the important thing here is, well, let me stop. The important thing here is you have got to get back to the realities of trading. You notice I haven't talked about indicators. I haven't talked about divergence. I haven't talked about the harmonic zones or Fibonacci's or anything else like that. All I'm talking about here is how the bar that you look at represents what traders are thinking. Okay? So prior to this week, this week obviously the market has a bullish tone to it. Prior to this week, what happened when the market got into this area here, this zone? What happened? I mean, just look at the bars. Well, you can see here on this bar, the market traded into this area here. And what happened? Well, it pushed back down. Okay? On this bar, what happened? Well, the market tried to get in, but eventually it came back down. If you look at this bar, the market pushed, and it really couldn't even get into that area, and it closed down. If you look over here, for 3 weeks, the market couldn't even approach the area. 2 more weeks where the market tried to get in, sold off. 1 week where it managed to get in there deeply, but then pushed way back down. Another week here, I'll change colors so we can kind of see through the mess. Another week here where it did manage to close inside, but it could not follow through the next week. That week was just lower. Here, this week, pushed in, couldn't hold, couldn't approach it, couldn't hold, couldn't hold. So what am I getting at? Well, think about what this means. Remember, if there are more buying orders than selling orders, the market has to go up. I don't care what your indicator says. I don't care what Fibonacci level it's at. If more buy orders come in than sell orders come in, the market's going to go up. So what we have to conclude is that in this area prior, there were more sell orders than there were buy orders. So, and I've made this point before. Now you can see that the market closed above that area this week. So what does that mean? It means, pure and simple, that there were more buy orders through this area, coming in through here. There were more buy orders than sell orders. That's bullish. Okay, so it's not, we can't just dive in and automatically say, well, that means the market has to go up. That's not what this means at all. What this means is that we now can see the